Opening a business bank account is one of the most important steps in entity maintenance, and one where many business owners encounter unexpected friction. Banks have specific requirements for opening accounts in the name of an entity. Understanding these upfront prevents delays and rejections. For an LLC, banks typically require the EIN for the entity, the Articles of Organization or Certificate of Formation, the operating agreement, particularly if it's manager-managed, since banks want to verify who has authority to act, a government-issued ID for each person with signing authority, and in some cases, a resolution authorizing the opening of the account. For corporations, substitute Articles of Incorporation, bylaws, and a corporate resolution. For trusts, banks typically require the trust document or a certificate of trust summarizing key provisions. The Corporate Transparency Act, which took effect in 2024, has added beneficial ownership reporting requirements. Businesses formed after January 1, 2024 must report beneficial owners to FinCEN. Banks are increasingly aware of this and may request CTA compliance documentation as part of their Know Your Customer, or KYC, process. Choosing the right bank matters. Major national banks have standardized processes that can accommodate most entity types. Community banks and credit unions often offer more personalized service and are sometimes more flexible with newer or non-standard structures. Online business banking options have expanded significantly and are increasingly accepted by payment processors and vendors. A key operational principle: maintain one business bank account per entity. Do not commingle funds between personal and business accounts, or between separate business entities. Commingling is one of the primary grounds for piercing the corporate veil. Subscribe to learn how to set up and maintain entity banking that supports your protection structure.